Top private sector lenders of India like ICICI Bank, Axis Bank and HDFC Limited have raised huge funds using the qualified institutional placement route over the past 1 week. A QIP is when a listed company can issue its equity shares to a select group of qualified institutional buyers. It undercuts most of the red tape that's found in other methods of raising funds through equity shares. Together, the three lenders have garnered 35,000 crore rupees from institutional investors, which indicates that despite the headwinds, investors continue to remain bullish on select financial sector lenders for the long term. On August 10th, ICICI Bank launched its QIP to raise 15,000 crore rupees. The QIP received a strong response both from foreign and domestic institutional investors. While ICICI Bank already has around 5,550 crore rupees set aside to address the COVID-related accounts when the RBI's moratorium comes to an end on August 31st. So it is not as if there is a crunch, but the fundraising is largely to build an adequate capital buffer for uncertain times. HDFC Limited also raised 10,000 crore rupees equity capital by issuing shares to qualified investors, including Government of Singapore and Invesco Oppenheimer Developing Markets Fund. In a filing, HDFC said the Committee of Directors has approved the issue of 5.68 crore equity shares at an issue price of 1760 rupees apiece, aggregating to 10,000 crore rupees. Besides, the corporation has also raised 3693 crore rupees through an issue of non-convertible debentures. Even Axis Bank yesterday announced raising 10,000 crore rupees via the QIP route. The issuance price of 420 rupees per equity share was at a 5% discount to the floor price of 442 rupees, which was determined on the basis of the pricing formula. The bank's CEO and Managing Director Amitabh Chaudhary said the issue was subscribed over 3.5 times and received over 70 bids from a diverse set of global and domestic investors. Amitabh Chaudhary also termed the transaction as a confidence capital, which signals that the bank can grow its balance sheet and support the economy and allays all possible concerns. Lenders are raising capital to shore up balance sheet ahead of the moratorium period ending in this month. This will bolster the capital position of these lenders amid the COVID-19 crisis, which has forced lenders to set aside more provisions and cover against future bad loan shocks. In the calendar year 2020, besides these three firms, the market has seen 10 QIPs so far, from firms including Info Edge India, Kotak Mahindra Bank, Avenue Supermarts, and Bharti Airtel. Experts believe while for sectors like aviation and hospitality, fundraising remains a challenge, but financial lenders are being preferred by investors. Lenders, it seems, will have to endure a lot in the days to come. While credit growth is falling, the threat to swelling NPAs is growing as there is still uncertainty on the part of pandemic and economic recovery. The 21st issue of the Financial Stability Report, July 2020 of the Reserve Bank of India, also presented a grim picture of the status of NPAs in India. However, large private sector banks look well positioned to endure this pain, and that is the reason analysts disapprove of the idea of avoiding them completely. Jai Kishan Parmar, senior equity research analyst at Angel Broking, says that investors should not blankly avoid the full sector, as the sector has few operationally well-managed companies, and in an uncertain environment, investors can buy top banks at a lower valuation.